Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to be showing you the new advanced custom backtester, formerly known as the legacy backtester, in its new home on the dashboard. Matt, do you want to share your screen and get us started?
First of all, an ovation for moving that legacy backtester over. I thought it would take a long time, but now with the latest programming aids, we got it over. So congratulations to you and the team. Pretty awesome. So when you come into the new dashboard, you'll see a welcome screen like this, and the research pillar is here. So that's where you start. And then, you generally the workflow, you could do it any way you want. We have, we're modular, but we have a flow too. Is you get your back test, you could scan on it, you could implement the strategies with scanners and implement through, as you say, through Tradier. I trade through Tradier every day for the last year almost. And then we can now look at your risk at a lot more granularity and then review it, using things such as a trade journal and the like. So that's the flow. So we're going to be talking about our custom backtester. So again, the flow on the backtesting is to generate a backtest and then save it to your saved backtest, and then you could come to it, on a daily basis. Sound good, Tyler?
Let's do it.
All right, so you click on the custom backtest, immediately you see, you could pin this tab. So if you go to backtesting a lot, so I'll pin this. And then, there's the basic end of day, easy backtester without the bells and whistles. So if I just press, run backtest, I'm going to get Apple long call spread. So obviously you could down click and see a bunch of different symbols, down click or drop down the strategies, see a bunch of different strategies. You could click on the days to expiration. This is 30 days, but you could also click 1 week, 2 weeks, 1 month, and you could change these. So it's very convenient. And then the deltas. So that's how we separate the strikes. So you could, move up or move down based on and widen or narrow the strike width, the spread divided by stock, and then we have mouse overs. So a spread divided by stock. So how much do you want to pay for this? In this case, it's a long call spread, so you're paying a debit. So do you want to pay 1% of the stock price or what percent? If you don't know, I suggest running it without, and then look at the trades, which I'll show you how to do later, and find the trades that you would likely do, and then what percentage has that been kind of historically, and then you could constrain the results to that particular percentage. Strike difference. So again, we were looking at deltas, but if you want to actually look at strikes, you could say, I only want them 10 wide, 5 wide, whatever. DTE difference is going to be 0 on this, although you can make a diagonal out of this by changing the DTE difference. So that would be the, like the leg 1 minus leg 2, and you could make a calendar out of it. Although we have calendars, in the drop down. So I would suggest doing it that way, at least to start out with. As a matter of fact, I'll just show it to you quickly and then I'll come back. So the long call calendar will have a minimum difference between the long call and the short call. So that's kind of the definition of a calendar. So, and interestingly, in that case, the strike width would be 0. Again, if you're running a diagonal, you could set the strike width. I'm going to switch back to the long call spread, and you'll see that strike 1 minus strike 2. So you're saying, why is it -2 as a max? Because strike strike one, like if it's 100 deltas and 105, it's going to be -5 is the difference between those. So that's why it's going to be a negative strike width in this particular case. So all clear so far, Tyler?
Right. So this is the basic back tester, right? So we're only seeing a subset of inputs and a subset of strategies that you can run here. But yeah, I mean, these entry parameters are kind of like the bread and butter of the strategies. Like you kind of have to understand those if you want to send more advanced custom back tests. So I definitely recommend understanding these parameters first before you move on. Because they're going to be in every strategy you do, especially the DTE diff and the strike width, because they control any calendar or straddle or strangle, things like that.
Exactly.
And if you have any questions on what the entry parameters are, like if you're confused what strike diff is, you can just ask Otto in the right hand sidebar, and it'll clear that up for you.
Yeah.
So if the tooltip's not enough information, ask it there.
And then if Otto gets a little clunky, just you could clear the chat history, or that's the way. So there's here comes the answer from Otto. So it's a nice. It's almost like having someone over your shoulder helping you. All right, so that's the basic one, right, Tyler? So the reason I start with that is because the basic inputs are the same. So now when you're in the advanced, you have symbols, you have strategies. We try to make it like, I love how clear it looks here, Tyler. So nice job.
Yeah.
The strikes, again, same thing, 2 weeks, 1 week, 1 month, etc. And strike diff is the same. And you could just press run backtest, and that's just like the basic. However, we've added a lot of parameters, including entry parameters. Most people ask for exit parameters. So let's just go over, we'll start with exit parameters, even though it's number 4. But most people want exit on profit and loss. I mean, that's the big thing that most people want. And the only tricky part here, and it's in the tooltip, is if you're going to exit on a stop loss, we call that a negative, and positive for the profit target. So if you wanted, negative 0.5, so you exit when you've a stop loss of negative 50%. So and then in this case, or 200% profit. That's how you would enter that. And so let's just talk about what these are. I mean, you could always just look at the mouse over, but holding days. So you could say, how long have I held this for? So if it's a 30-day, to expiration, you might say, I only want to hold it for 10 days. Or there's another option that's somewhat similar, is I want to exit when it gets to 20 days. So that's another way to kind of do a similar thing for this. And then exit on the spread constraint. So so this is just some basic thresholds of the entire spread. This is the absolute delta of the spread. We have a strike difference, when the trade price divided by the strike. So that's a very good thing. So, if if the price with the spread is such, $5 wide spread, for example, and there's only 5 cents left, or drops below 5%, then you might want to get out. So that's a little bit more advanced, but that's a good place. Or just an absolute spread you could put in here, like with 5 cents, get out. And then there are, strike triggers as well that you could put in, like, leg 1 absolute delta, or leg 1 out of the money percentage is between X and Y. So, you could see how you could start to really drill down. And then there are also date triggers. So we could also say, well, I want to get out before earnings, or you could have an earnings trade where you get in the entry parameters, you get in before earnings and then you get out after earnings. So this is really powerful for that type of system Tyler. Anything else on the exit parameters?
No, yeah, I mean, that makes a lot of sense. I like that you started with the profit and loss because that is the most asked question. And yeah, it's a little bit confusing with the decimals there, but I think people get it.
Yeah, but that's why that's why you do a mouse over. So you want to,
Right.
it also gives you a lot more flexibility there. Okay, so let's look at the entry parameters here. So, you could set the start date. So you could go all the way back to 2007 and set the end date, or we set it automatically for when we update the database. And then entry days. So the entry days is sometimes misunderstood. So entry days is, I think, one of the more important things for setting a back test to overlap. So like you might, instead of only having one trade on and then when it exits, then you put another trade on, you would put one trade on and then put another trade on and then another trade. So you have 3 trades on at the same time. And so entry days can help you do that. So in this case, where there are 30-day DTE, you might set, I don't know, like 1 day or 3 days or 5 days to kind of consistently enter a trade. So that's a real interesting thing. Expiration type, you could use monthly only, like if you don't want to trade the weeklies, and now there are a lot more weeklies coming out as they add more expiration, so you could avoid those because some of those are very illiquid when they start, and so we'll talk about how to eliminate some illiquid names in a bit. Stock position, you could have an overlay, you could have a married. Overlay is just, it holds it the whole time. Married is as you trade, you put on a new stock position. And then return type. So ORATS, I like to put things, and ORATS like to put things in terms of notional. And it's more penile, but so it's more like you use the stock price as the divisor. So in that case, you could compare like a short put spread with a long put spread. If you use margin, the margin is a lot different if for a short position or, you're not using stock price then as the divisor, you're using what the calculated margin is for it. So, there are some pretty complex margin requirements, like especially if you're naked. So that's we give people a choice there, and you could have compounded or average. The problem with compounded, Tyler, is that you could go bankrupt in the back test pretty quickly. But we also have compounding in the graph that you could reset.
Yeah, I was actually going to bring up the graph. If a lot of times when people keep it on the default notional and then they look at the graph, it hardly moves, right? And that's because a notional return of a strategy compared to a stock return will sometimes look like a pretty big gap. So there's something to note. And maybe you could pull up an example, Matt. But we have some ways to kind of change that in the graph, but I think a lot of people kind of get hung up on that sometimes.
Yeah, so here's what you're talking about, Tyler. Like you could barely see it, right? At 20%.
Right.
If you go to 100, you could see it a little bit more. And this is because a long call spread, generally has a very small margin, but a large, obviously if you're using stock price, your returns aren't going to be that great. I mean, and we could look at the trade log just to prove that out. So here's a trade log. This shows every trade in the strategy. You could look at different years, at different months here. So I'm just going to look at the default is January or 2025. And so we had a $5 wide call spread. So that margin is only $500. and you made, $98, or you lost $98 on that particular spread. So it's a very small amount versus the stock price, large amount versus margin. So it's a lot different from a margin perspective. So we try to present that in different ways too. So the annual return is displayed, and the rest of the data is here as well, Tyler.
Yeah, I think you were looking for the margin return there, but if it's a advanced custom backtest and you set it to notional, it's only going to show you the notional there. So
Oh, that's right.
we don't compute both returns, but in the backtest finder, we do compute both returns. So you'll see a few different performance metrics here than you will when you're browsing backtests.
Oh, I see. Okay, well, this is new, and that's the first time I drilled down that way and look for that. So that's good to know.
Yeah.
All right, so we saw the graph. We've gone through the entry triggers, and now we're on to, this is the market width, for example. You don't want to trade something that's too wide, and here you could set that. Generally, we set this at like 1, or it depends, if it's SPY, you could set it at, like 50 basis points, 0.005. But generally, I set this to 1. You don't want the market width to be over 1. CP diff's a little bit different. That's like how far off from put call parity is it? It's a little bit more advanced, but that's, I think, the best way to tell if an option is priced well is to look at the put call parity and look how far off it is from what is estimated. And in this case, I would just set like a 2% put call parity, 1% max width, and then you have some much more liquid prices. And what you'll notice, and the way to kind of debug your back tests is, when you look at graphs, you don't want to see a huge bump, like a lot of profit in one month versus another month. So I would go to monthly returns. So there's, and so we had a big monthly return in April of 2020. Well, that's expected because the market went down a lot, but you don't want to see like a big, like a big blip in your graph, because that might indicate that a market was off. So if when you're backtesting, you have assumptions. It's not like you're not trading actual. So when you go in and try to trade something in a market maker and the market's very wide, the market maker knows the true value of it. That's usually around our SMV, our smooth market value. We've done other videos on that and why that's so important. But when you're trading in a backtest, you want to constrain the widths, and that will help you avoid, like a lot of profit or a lot of loss that you would get just from entering from a wrong price, errant price, not reasonable price at the beginning. So I just wanted to point that out.
Yeah. I want to make sure we have enough time to go over the scan for options, the optimizing, the saving, the downloading, kind of all the stuff that you can do in the backtest details, because that kind of ties it. This is formerly the legacy backtester, which has been around for many years, and these features are kind of what tie it into the dashboard, kind of complement and complete the workflow that we have built in the dashboard.
Yeah, I'll hurry along. So here's the leg relationships that we talked about before. So this is a long call spread. So the DTE diff is 0. We saw also before, if you had a calendar, it would be like 2 or 10 or something like that. Delta total, that's a little bit more advanced, but we explained how to use it there. We generally use the strike width because people understand that better. There's also a strike width percentage. So you could use that, and we show the formula there. Hedge parameters, you could also hedge with stock. And so that's something kind of unique to the ORATS backtester is, if you have a delta neutral strategy, for example, you could run it here. So, all right, let's talk about some of the things now, Tyler, that you mentioned. So, so we have this strategy, now what do you want to look at?
I mean, we can just go left to right.
Okay.
There's 6 buttons up at the top there. What does each one mean and how to use it?
Yeah. So you could look for similar backtests. That's mostly for the backtest finder. We've gone over that before. There's also a way to optimize to find the best entry and exit strategies. We have had various webinars on this as well. It's a little bit difficult to use in my opinion, but like it's such a great tool. Like, do you want to, find an indicator and only get in when the forecast is above the, implied volatility? So there's a lot of things that you could set here and go test those. Again, I don't want to get too far into the optimizer here.
So, yeah, just to clarify, the optimizer has about 100 ORATS indicators. In this advanced custom backtester, you can actually set them manually, right, in the entry and exit indicator triggers section. So, we're kind of bringing that into the advanced custom backtester too. I don't know if you want to show that quickly or not.
Yeah, that's a good point, Tyler. So what Tyler's saying is, in the advanced indicators, you can bring in the entry dates triggers here. So you could say
entry indicator triggers on the right.
Oh, indicator. Yeah, this is date triggers. But yeah, indicator triggers. So what you're saying is, hey, if Contango or if all these other ones are in such a state, get into it. And then conversely, if all those things are in a state, then you exit at a certain time. So maybe like I think that's its own show right there. So we'll just mention it here and then kind of show people how to use that in a different show. How about that, Tyler?
Yeah, sounds good.
Okay. All right. So yeah, let's go back to a back test. And so we said, how to do that. Edit is just to edit this back test. So that's what we're doing essentially. And then, scanning for options. So this is, now you have this, or actually to save this, Tyler, like maybe we should show how to do that. Yeah. So this is how, so if you save this test, okay, and then what does that do? Well, it saves it to your, drumroll please, save backtest. So now if you look for that, you can look, so here's the Apple long call spread that we just saved. Now I could auto trade that, which means, and I'll turn that on. So I will get a trade, today, near end of day. So the end of day auto trader, which this is called, or near end of day, trades 14 minutes before the close. So that's when, in order to be consistent, that's when our auto trader looks for trades. So that I'll get a trade in my, and then I'll just kind of drill down in my positions, in my ORATS paper trading auto trade account. This will go in today. So, and then we'll monitor it, and you could look at it and see how well you're doing. So the point is to be able to see, does the forward testing match the back testing, which is a very powerful tool that you could use here. Anything else on that, Tyler?
Yeah, I mean, it's very powerful. You can go straight from a back test to trading that back test in the exact same way. So, the goal would be, to replicate the performance of the back test. But
right,
we're going to have ways to see the future versus the past. It's going to be really cool.
Yeah. So I mean, now it's a little bit manual, but I could, like let's just say now we're in March. So you say, well, then you could update this test. Like you could edit this test, edit the entry parameters, and instead of ending at December, it'll it'll end at January, and then you can see how that month did, and you could compare it to your auto trading. So that's what you want when you're testing out strategies. You want to make sure that at least the simulated forward test match the simulated back test, and eventually you'll want to implement these on your own and make sure that matches as well.
Yeah. One quick thing to note, at the top there in the symbols section, there's an advanced option, meaning you can upload your own entry and exit dates for a list of symbols. So this is a highly requested feature. It was formerly in the legacy backtester, and it's if you already have set your entry and exit dates, and that's what you want to backtest, it's a fixed set of dates, then you can upload them here.
Yeah, and that's, again, if you have our data API, or if you have your own way of identifying, and there's a myriad of ways to do that right now, you could, we in our help sections, we show, examples of this. So, I would encourage you to, if you have your own signals, you could then use it with any type of strategy that you have here. So it's very good. All right, so we're almost done with the buttons for this. So let me just go here. And now you could download all of your all of these tests and open it in Excel. So it's strategy output, strategy trades, and you could see all the trades that you made, which is really neat. Now you could start to manipulate those on your own in a CSV, in a program, or in Excel or something like that. So very cool. So that's I think a good overview, Tyler, of the advanced. Again, you go to backtest, you go to custom backtester. So the advanced custom backtester, those are, you can see it's quite a bit of things. And what is this, Tyler?
This looks like intraday to me.
Yeah, so that's our next thing we're coming out with, is with the ability to trade intraday, 0 DTE tests, or just regular tests where you trade intraday, and it'll check things intraday. And we also have, of course, the symbols and all that. So we're going to tease that, and then so we're going to come out with the next webinars, or we might talk about the entry and exits, and then the next webinar after that might be the intraday, or that maybe we'll do auto trading. And so there's a lot that we're going to be coming out with. So make sure you subscribe and like this video, and leave a comment. What is your favorite feature, and what feature is missing, or and we read all the comments. So make sure you comment below.
I like that. Well, yeah. What's your favorite feature? Yeah, that's great. We'd love to hear it. Yeah. As always, if you guys have any questions, definitely try asking the Auto AI chatbot in the dashboard first, and then ask us at support@orats.com if you have any remaining questions. Subscribe to try out the new advanced custom backtester and all the new tools we're coming out within the next few weeks. Thanks for the great show, Matt, and Tradier for hosting. We'll see you guys again next week.
Thanks, Tyler.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.